Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have our solid Monday guest on, Scott Redler, Chief Strategist at T3 Live and T3 Trading Group. He is going to help us navigate, I guess, the first major week of earnings. How you doing today, Scott?
I'm doing good. Glad to be here. Getting all set for another week, as like you said. Here comes some earnings.
Okay, so I'm going to bring up this chart here, and you can talk about the S&Ps. We did have a nice rally at the end of last week, knocking on the door. Not quite all-time highs here, but sniffing the $2,100 level, trading a little bit this morning. Just walk us through your thought process here this morning, just for the broad market.
Okay. Well, if you remember, about a week ago, we came in, the futures were down like 13, 14 handles. Everyone thought the world was going to collapse, and we wound up holding higher. I think if you approach each week as a separate week as a trader, you can compartmentalize it. And last week it was real important to see, would we hold above, just say that 2,040 to 50, and then midweek we held 2,072, and then on Thursday of last week we cleared 2,085. That opened up the door for Friday's gains. So today, you want to see what's next. So a little bit of an inside day would probably go a long way. And I would think that if the market wants to keep some momentum, in my head, we should hold above 2,088-ish on the SPX. So if we were to pull back between, just say today, tomorrow, as we wait for bank earnings or whatnot, I would say, we hold above 2,088, go a little sideways, and then I think there'll be a little bit more power to perhaps take out that 2102, and then the resistance zone from earlier this year is 2013 to 2019. So it's going to take it like day by day and try and figure out if those momentum and the stair step that we've been following for the past month stays intact.
And a lot of people have been following, the small caps for kind of a key of what the market's doing. Kind of a similar chart here, moving up near the highs, unable to break through here. You think the small caps are going to be able to lead us to new all-time highs?
I think the small caps and mid caps have been showing relative strength and some out of performance. Both are above the 8-day moving average, and they tend to, go up a little bit before the S&P or even the NASDAQ, and sometimes, they come in before. So right now, I'd like to see the IWM hold above, I'd say really like 124.75. And if it starts to get above Friday's high of 125.79, I want to see how it handles the prior high of 126.32. Does it meet resistance and fail? Does it pause? Or does it break, with authority above? If it breaks with authority above, which a little doubtful because there hasn't been much of that, this year, especially in the U.S. market. That would give me some clues that perhaps the S&P and technology and some of the other names should have more power. And if you look actually at the mid caps here are even tighter. I think that potentially could be a good cash flow trade for traders who aren't even in it right now. Where if you just say in the MDY small versus 277, and if it gets above 280 and holds above it, perhaps add to it, and then clearing the prior high of 280.39, and why not see 282 to 283 if we're going to have healthy action this week. So I think watching the Russell and the mid caps for an early breakout before the S&P or even the NASDAQ could give us some clues, at least not to be short. We'll have short in the brain and perhaps add to some longs for additional strength.
Okay, we got to talk to you about Netflix here. And boy, oh boy, these high beta names woke up last week rallying. Netflix just getting all this love from Wall Street ahead of earnings. I mean, they're just ganging up. Price target raised by Goldman Sachs, couple upgrades here. People are chasing it. I mean, if you were looking for, an earnings pop in this thing, now it's rallied 60 points. I mean, what are these analysts doing here? Do they know something we don't?
When the analysts give out a free lunch, not very often. If you remember 2 weeks ago when Netflix looked like everyone was saying that was going to fill the earnings gap, it was like 420. You're like, would you go short Netflix? I'm like, I don't go short Netflix. I don't like to do that. Thank goodness, and just look how fast it can go when it wants to go. Last week, actually, we also talked about how it could get a little bit of a squeeze prior to earnings because people would be scared being, shorted. And then if you look on April 6th, that igniting bar, which was last week, which engulfed 4 or 5 sessions, that gave you some clues that it would be in play last week. And I think a lot of my traders gravitated towards it. But now, 60 points off that low and, a stone throw away from the highs, it makes it a little bit more difficult into earnings because now earnings are going to have to be like stellar. If you need stellar earnings, maybe a stock split. I think at this point it would be good for them to split their stock. Makes it trickier. It's tricky to trade options now too because the premiums are so high. What I'll probably do is I'll probably wait till Wednesday and I'll write down different levels. Like you have 486 is the pivot high of the year, and we're only at 430. So if the earnings come out and they announce a split and they have decent guidance, I'll probably trade it after hours. But the easy bounce back trade for traders was last week, and thank goodness it happened because you didn't have to worry about being long or shorted with earnings the next day. So last week was a clean, tradable week. Now I think if you weren't involved, you just have to wait till Wednesday and then figure out where it is to see what exactly type of strategy to play into the number.
Another high beta name that got off the mat last week, Tesla Motors. Some fundamental news. I mean, basically they're selling more cars, coming out with a new Model S. A lot of the gains of that stock has been in the after hours and pre-market trading here. Now just kind of taking a breather here at the 210 level. Could you give us your thoughts on Tesla?
Yeah, the last month or two we've talked about how it was broken and how it was trapped in a descending channel. And then finally, last week on Monday, you had that gap up with power, and it closed above the descending channel. That put shorts on alert and gave active traders like myself, just a little bit of a signal to start looking at it a little bit closer, that there could be better action. And if you look, that gap did not get filled. So 197.50 was the spot to trade against. And then since then, like you said, unfortunately, a lot of the gains have been happening after hours, so you have to take some overnight risk. So it would be nice if a trade actually happens intraday. So at this point, to hang out above 206, 207 would be constructive. And then intraday, if it were to take out 211.65 with some kind of authority, the next step is the 200-day, and it hasn't been above the 200-day in a while. So if it could reclaim that, then I think the bulls would grow a little bit more confident, especially since some of the numbers have already been announced. I don't think Elon Musk is one to announce positive results and then positive sales, and then all of a sudden earnings disappoint the other way. Because then that would be a dagger in many traders' little trading spigot or back even.
Let's move on to Apple, kind of nudging up here towards the upper end of its trading range. You have the first official sales of the iWatch, according to Tim Cook. Sales are going good. You have earnings coming up in the issue. Been real quiet, kind of approaching the upper end of the trading range. Analysts have been getting a little active. Had a couple price target changes, downgrades yesterday. Now you got someone coming out the other way, going to 170 price target here. Still kind of sitting on hands here in Apple. Or are you looking for this thing to break out this time at the upper end of the trading range?
I'll say recently, every time I've tried to add to it on the breakout of the trading range, it hasn't worked out too well. But a million units is pretty impressive considering that I'm going to go out and buy an iWatch, but I feel like I'm going to wait till I can go to the store, look at all the bands, see how it looks, see the different styles, so forth. A million orders that were a million units to be sold just by pure ordering without even touching it, I think that's pretty impressive. It shows that it's going to have demand, and I think that all these companies coming out with smartwatches is going to create a real industry for it, and Apple usually does best there. Technically, I think 128.10 is now the level that it's going to contend with today. If you were long from last week, thinking you'd get some good numbers overnight, maybe you sell a little bit, but for something to be different, a close above 128.10, and then all of a sudden, there's really no resistance back to the 130s. I don't think that it's going to clear the high before earnings, but there is some room for a trade between here and the 130s, I think, before. And then the big report, they're going to talk about their buyback, perhaps a dividend raise and results, and they have a whole new product category. I think every kid in every middle school and high school in America is going to want this for Christmas in the middle class next year. So they have enough time to figure out the bugs and whatnot. So I think that Apple's highs of the year are not in, and I don't know if it's 170, but I think it's something to stay long if you're there, and if you're trading it, it's better to trade it from a bullish stance versus a bearish stance.
So I'm not sure how active you are in Qualcomm, but let's say you took it home overnight, and now some activists come out and thinking that the company should be split in two here, different divisions, trading up quite a bit in the pre-market, kind of going into no man's land here. What's your take on Qualcomm here, trading up $3.08 at 72.24, off the pre-market high of what's pre-market high of 72.90. Really nothing on the daily charts here to tell you to go out and sell this thing at 72.90. What's your take on these activists?
Well, listen, activists try and create shareholder wealth, and I can't argue with them. I'm obviously not going to fight them. Who am I? So if you're in a name that some activists come and the price appreciates, it's good. Qualcomm's been stuck in the mud for a long time. It used to be a leader. It's been a laggard since last summer. And if you look, it closed pretty strong on Friday. So I think if some traders took it out long just because it looked as if it was in bounce mode to test the upper end of the resistance, they're getting rewarded this morning for taking on the risk. So I think you buy the open here in Qualcomm. I don't think so. I think if you were long it from Friday, you do have actually some resistance coming in between 72.80 and 74. Maybe sell into it and then see how much of today's gap holds. That's what I like to do. When something gets a catalyst or ignites, usually you have a big gap up day, and then that day you're not sure what's going to happen, but then if all of a sudden that whole gap is left open, then it digests above it, and there'll be more opportunities. And at least if you see that pro gap never gets filled, it usually leads in the direction of the next move. So the first day when no one truly knows, if you're in it and you're up $3 or so, I would at least sell half, and then see how much of the gap holds, and you want to see at least 50 to 70% of that gap hold to show that it's real and not just sold into.
Okay, before we get into some of the bank earnings for this week, I got to get your take on the GE news from Friday. Really caught the street off guard here. Biggest volume day, biggest up day in years, and General Electric. Boy, what's your thoughts on this? First, comment on the trading activity from Friday and looking forward.
Well, if you look at the bar on Thursday, okay, you can see the strength there, right? That was on Thursday. That was 4.9, right? Doesn't it look like somebody knew something?
Okay.
Because that you don't see a day like that in GE where it's closed on the highs and engulfs the whole range. So traders who didn't have no idea just saw the bank strong. Just remember on Thursday too, Goldman Sachs was a little strong, JP Morgan, some of those guys. So again, they say you get lucky, but luck is when opportunity meets preparation, and GE actually was a decent risk reward into that. But now, what do you do after a huge outsized game like that? If you're in it, you sell some and you stay in it. As a trader, though, I don't think you're going to see much more follow through that's fast like this. But it kind of puts people back on their toes in these industrials. So some of these dead names, whether it's a Caterpillar that's been annihilated, maybe some shorts say, let me look down here, or let me cover them, or longs who say a quality name like this that's been dead, maybe they do something and it actually woke up a little bit on Friday. Then even you look at something like an IBM, that has a nice tight chart pattern that it looks like it was in my thesis the past 2 years to stay away, but for a trade, it seems like if IBM can get above 165, maybe there's a trade there and a squeeze if there's some volume, or 164 to 165. And it just goes to show you that, I guess if the stock's not performing well, and you have, cash, and you can do a buyback, and you can do a dividend, and they're, big time household name, there's still ways for it to increase. Not the way we want it to increase, but who are we to say how we want it? Like, there are people bashing, GE, now the best days are behind them. Who are they? That's so people said that it's just a bad thing to do, but why? If you want shareholder value, and if you could do a buyback and do a dividend and pay people to sit, and also have some buy demand in there, and there's nothing cheap enough to buy out there by using your capital, and we think your stock's cheap, then go that way. Same way Apple's sort of been doing too for the past year. They thought the stock was cheap, and they went in there, they started buying it, and anyone in there is a very happy fellow. Everyone else who's not in it and bashing it, they're probably just jealous.
We're on the line with Scott Redler. He's Chief Strategist at T3 Live and T3 Trading Group. He joins us every Monday. Scott, we want to talk a little bit more about the bank earnings coming up, kind of getting things kicked off this week with JP Morgan, finding a range here, major resistance at the $62 level here. Good support, well defined, just on 61 and just under. Been quiet here since March, basically trading between, since April, been trading between 60 and 62. What's your take on JP Morgan ahead of earnings?
I think if any bank has a chance to go higher, I think it is JP Morgan. It's one of the ones where everyone loves Jamie Dimon, and they've taken over so many different, areas of the actual financial business. If you look at the chart, as I look at it now, you can almost see a little bit of an inverted head and shoulders pattern where you have last year, November, December could be like the left shoulder. The head could be January, February, and then March, April, the right shoulder. So if they actually show some kind of decent earnings, this thing clears, 62.40 to 62.80, and it seems as if it could see the mid 70s, which is what Barron's actually said it could see this year. So if you had to be in a bank, I would think that JP Morgan would be one of those banks to be in, and I think if they're just in line, it'll be treated okay. So, no one's expecting huge earnings reports from the banks, considering that rates are so low they can't make money on deposit. Trading and volumes aren't, phenomenal, and maybe if they have a good asset management division that have been doing well for clients because of the gains everywhere, maybe that could help. But overall, I think the banks just have to be in line, and there's not a lot of people expecting much, and if you have to be in one of them, I would think JP Morgan would be one of them.
Let's move on to Citigroup here. Same thing, earnings coming up this week. Got over 56 and couldn't hold that, had to pull back. Now just kind of fighting its way back. Kind of same expectations there for Citigroup. They come in line, they should be okay?
Yeah, I think Citigroup has more to prove. If you adjust for the split, the stock's still just at $5. It was one of the banks that never, ever really recovered. You look at the monthly chart, it really between 2013, 14, and 15, it's been in this channel. And I think public relations-wise, they haven't had anything really bad happen to them in the past year or two. So I think people wanted to go up. They just need to see some kind of earnings traction. I actually listed it in my 2015 thesis that if you can get above 56, there's really not a lot out there into the mid to high 60s. So I think if it's just in line, I think it acts okay. I don't think it's explosive, but if they actually show some kind of potential, this could be a bank that could surprise people, in 2015 to the upside.
Okay, Scott, before we let you go, I just want to talk about what's going on over there in China. Shanghai has just been on fire, taking some of these stocks along with it. It's just a bubble? Is it mania? Is something just shouldn't stand in front of, or we getting near a top here in the Chinese market?
Well, I read a yearly thesis, and last year, not the one for 2015, but for 2014, it was to accumulate the FXI. That if you remember, in 2012, you had that big breakout in the SPX above 1576 after a decade-long consolidation. So I was like, look at the multi-year consolidation in the FXI. And it's very, very interesting that I don't know when it's going to go, but if you buy it every single month over the course of 2014, at some point it's going to break out. And now you look at the chart in the channel, it broke out above 44, now it's at 52, which is probably 3/4 of the measured move. So in my note, I said, if you want to trim a little bit into this excitement above 52, you do so. As a trade, maybe if you long it, you also sell some. I think the measure moves to about 55, 56 for the year, so it still has some more room. So just don't just short something because you think it went up too much. And at this point, if you're looking at it actively after 30 to 40% move in a lot of these Asian indices, I would not just initiate today. But it doesn't mean you can handle shorting it today. So I know your time frame. Bad news is still good news there, as you saw with the export news, and it definitely is very, very, very extended into this open. So, again, take care buying something so extended from all the moving averages. And if you were accumulating it last year when it made sense and you played the breakout, maybe trim some into this week.
Okay, Scott Redler, Chief Strategist at T3 Live and T3 Trading Group, joining us with a good outlook for the market this week. Thanks a lot, Scott. We'll talk to you again soon.
Sounds great. Thanks for having me.